Okay, let's just dive right into this. You finally decided it's time to learn how to invest, right? You open up your browser, you type in how to make money trading, and bam, you are hit with a completely overwhelming dilemma. Welcome to today's Explainer, where we're going to break down a massive hurdle for beginners: stocks versus crypto versus Forex, and exactly what you should learn first. Because as a beginner, you're immediately bombarded by three totally different financial worlds. I mean, on one hand, you've got people claiming stocks are the safest way to build wealth. Then you have advocates screaming that crypto's the absolute future of money. And then there are those promising you can make thousands of bucks a day from your laptop trading Forex. So you're sitting there asking yourself, well, which one am I actually supposed to learn? I mean, they all promise incredible opportunity, right? But here's the major problem. Most beginners don't just pick one path. They try to learn all three at the exact same time. And let me tell you, attempting to juggle all three markets simultaneously is a total recipe for disaster. It usually just leads to deep confusion, massive frustration, and honestly, losing your hard-earned money. So we really need to reframe this entirely. See, most beginner investors start with the wrong question. They ask which market makes the most money. But the smarter question, the one that's actually going to serve you, is which market teaches the best financial habits. Because investing isn't just about chasing cash. It's about building foundational skills, developing discipline, and getting a deep understanding of value. And as we're going to see, some markets are just simply much better teachers than others. Let's break these down one by one, starting with the stock market. When you buy a stock, you're purchasing a small piece of a real productive company. We're talking about tangible, everyday businesses like Apple, Microsoft, or Amazon. When those businesses grow, sell more products, and become more profitable, the value of that stock tends to increase over time. It naturally encourages you to think about real business models and long-term value, rather than just lines on a chart. And the most fascinating detail here is this single number, 10%. Historically, the S&P 500, which is an index representing the 500 largest companies in the U.S., has returned roughly a 10% annual average over the long term. Now, of course, markets fluctuate, right? Some years are down, some are absolutely incredible. But over decades, stocks have proven to be one of the most reliable, battle-tested ways to build wealth. And that brings us to a really crucial point. Many millionaires aren't day traders. They are long-term investors. They consistently put money into productive companies for years, sometimes decades, and just let the power of compounding do all the heavy lifting. They're not in it for the quick, adrenaline-fueled trade. They rely on consistency and patience. Now, let's pivot and look at crypto. Crypto is fundamentally different from stocks. Instead of owning part of a company with physical products and quarterly earnings, you're owning a digital asset. Some cryptocurrencies are used as payment systems, others power decentralized apps, and honestly, some exist mostly because of internet hype. But look, there's no denying it can produce extraordinary gains. Just think about Bitcoin. It was worth around $1 in 2011 and has traded above $60,000 at various points since. I mean, that is a dramatic, historic increase in value. But there is an aggressive flip side to that story: 70%. Crypto is extremely volatile, and Bitcoin alone has experienced massive crashes, dropping 70% or more multiple times in its history. That extreme volatility can absolutely create opportunities for sure, but it can also completely wipe out inexperienced investors who just haven't learned how to understand and manage risk yet. All right, that brings us to the third option you're going to hear about constantly: Forex. Forex is simply the global market where foreign currencies are traded. In this environment, traders are buying and selling currencies against each other, like the US dollar, the euro, the Japanese yen. It is a massive, fast-moving 24-hour space. Just consider this staggering number: $7 trillion. According to the Bank for International Settlements, that is the daily traded volume in the Forex market. Every day. It's actually the largest financial market in the entire world. It's just huge. But there's a major catch that most beginners completely miss when they get lured in by those big numbers. And here is the dramatic tension we really need to address. A staggering 75% of retail Forex traders actually lose money. Why? Well, because Forex trading often involves leverage. Leverage means a trader might control, say, $10,000 worth of currency using only $500 of their own money. That sounds incredibly exciting, right? But if the trade moves against them, losses happen incredibly fast. It's not that the market is impossible to conquer, but the risk is just exceptionally high for someone who's just starting out. So, connecting those stats back to our main question, here is the core thesis of our explainer today. The single biggest mistake beginners make is treating investing like gambling. They chase quick wins, they constantly jump between strategies, and they follow hype across these highly volatile markets instead of focusing on the fundamentals. And jumping straight into the deep end usually leads to some very, very expensive lessons. Think of it like a simple driving analogy. Learning to invest through stocks is like learning to drive in a normal, everyday car. You learn the basics, you slowly build your confidence, and you understand how the system works on normal roads. Jumping straight into leveraged Forex trading or even highly volatile crypto is like trying to learn to drive in a Formula One car. Technically, yeah, it's possible to do it, but your risk of crashing right out of the gate is monumentally higher. The source material makes a really profound point here. The best market to start with is the one that naturally forces you to learn long-term thinking. Because once you understand long-term investing through stocks, moving into other markets later on becomes so much easier. Why? Because you've built highly transferable skills, risk management, a solid understanding of market cycles, and a mastery of investing psychology. These skills transfer absolutely everywhere. Let's walk through a specific math example to show you what real, methodical momentum actually looks like compared to just overnight hype. Imagine someone invests $500 a month into a diversified stock index fund with an average 8% annual return. After 10 years, they would have roughly $90,000 invested. It's not an overnight success story, sure, but it is real, undeniable financial momentum. And momentum is what creates actual long-term wealth, rather than relying on a stressful boom and bust cycle. So how does all this translate into an actionable progression? Well, here is your ultimate educational roadmap. Step 1, start by learning the stock market and the basics of long-term investing. Get that foundation down. Step 2, once you understand those fundamentals, you can cautiously explore crypto as a smaller, higher-risk part of your portfolio. And step 3, treat Forex trading as a highly advanced skill that requires serious, dedicated education and discipline before you ever even attempt it. This really is the path to avoiding the most common beginner mistakes. Because remember, mastering money isn't about chasing the most exciting, shiny object. It's about building knowledge, discipline, and financial momentum that compounds over decades. If you master the fundamentals first, navigating any new trend or market evolution becomes drastically easier. So I want to leave you with a final provocative thought today. Which market interests you the most right now? Stocks, crypto, or Forex? Think about it, drop an answer in the comments, and most importantly, use this roadmap to take your very first step toward building a lasting foundation today.